Hello traders, Gary Wagner here. Just after 10:20 in Honolulu, 4:20 in New York. It is Monday, 10th day of October, 2016, and this is the Daily Report for Gold and Silver. Despite a stronger U.S. dollar, we do have precious metals to the upside. A big difference in terms of net change between spot and futures, but nonetheless, precious metals are up. When we look at gold futures, COMEX, of course, we're showing a net change of up 970 on the day at 1261.60, the high 66.80, and the low 58.50. So we're just a couple of dollars off of the low. Now, when we look at spot is also trading higher, but the net change up about $2.20 at 1259.67, a low 56.80 and the high 64.93. When we look at spot silver, that is currently trading higher at 1764, putting it up about 14 cents on the day, or a 0.8% change. Low on the day 1749, and the high 1780. And lastly, just want to take a quick look at COMEX. COMEX trading up 29 cents at 1767. Let's take a look at our first chart. So traders, absolutely no doubt, we have seen a tremendous amount of downside pressure in the precious metals markets over the last couple of weeks. We noted the fact that our yearly high right up here, which sits at around 1380, hasn't even been tested or flirted with on these last two rallies, one being here, and then this rally, of course, here. And we did also talk about the fact that we had a critical level of support at roughly 1300 to 1308. Significant in that when the market did break through this particular price point, it did so with a vengeance last week. I believe this was about a $42 decline, then a small decline, then a fairly sizable decline on Thursday, and of course Friday we actually came in and tested these new lows, these lows being above 1240 and right at around, call it 1250, somewhere in that area. I believe 1247 would be this particular line. That is the longest of our retracements that we have in there. And we talked about on Friday, and let's go ahead and compress this, but we talked about on Friday the fact that the point that I'm looking for support at this point is based on very, very loose Fibonacci harmonics coming in between 1238 and 1247, and that is based upon a double harmonics or a single harmonics, but one at 1247, which is a 38% retracement. That, of course, is a large move, and the large move that we're looking at is 1371 down to the low this year, so from the low to the high of the entire year. And so that's why this particular retracement number is so darn important, because it accounts for the lows of the year as well as the highs of the year. And so this is a benchmark that we really don't want to see broken, because what that says is in the big picture, we saw this market come to a low of 1050, trade to a top of 1380, call it, then retrace 38% to roughly 1238, and then resume on its upward move. It still could go lower. You could even get something as deep as a 61% retracement. However, in the big picture, that's certainly not what we would expect or what I'm looking for. So this is the area that I feel we could see a beautiful setup for a long play here, and especially after such a devastating move to the downside. Now, the fact that it's holding and it's up a little bit, that to me is a ray of sunshine, so to speak, but I really need to see a sunny day before we enter the market from the long side. As a side note, we talked about this for a little bit on trending markets, and that is we had a very, very strong U.S. dollar today, and yet gold was able to definitely compensate for that and move higher. I guess the best example would be to look at spot gold. And so traders, I've just gone ahead and pulled up a chart of spot gold, and the key to this is we're up about $2 right now. You can see the small candle right here. Now, of that $2 rise, $7.90 is attributable to trading, and so the market was actually up almost $8 on the day in spot, but when you account for a strengthening U.S. dollar, you've got to take away about $5.90. And that's where we're getting our net change of plus $2 on the day when we look at spot. So traders, we are looking at a silver chart, basic candlestick silver chart. And this silver chart, of course, has a couple of different studies, very, very simple studies, but studies nonetheless. The first is a similar fib retracement that we just looked at gold, meaning we're looking at the lows that silver traded at the beginning, or the lowest point this year, which happened to be at the beginning of the year, at just below $14. Up to these tops. Now you notice I've placed it not at this really ridiculous high, but at these highs right here, which come in at 20.85. I think it's more realistic. And then when we do that, we plot our different levels. Now, if you recall from the gold chart we just had up, we had a tremendous spike in the price of gold from the bottom of 1050 up to that 1380. And when it came down to a 38% retracement, just above that particular price point. Silver, not so much the same. It broke through the 38% retracement and in fact flirted with a 50% retracement, so a little bit deeper. Now, my concern is not so much this level. This level obviously needs to hold, and I'm going to take out of play the 1810 until the market moves up. However, if we take a look at these lows right here and we create a trend line coming in, which is our support trend line, we clearly broke through that with the activity last week, and we are just at that price point now. So for me to get bullish on silver, I need to see a solid close above that, and then we really need to see it move back above the 38% retracement. So I'm a little bit more bullish on gold than I am on silver right now, only based upon the technical indicators in the charts. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.